G'day folks, and welcome back to another edition of the Rough Consensus podcast. Today we're going to be talking about everybody's favorite hyper volatile MicroStrategy, MSTR. I'm talking with Jeff Walton, who goes by the handle Punter Jeff on Twitter, who's done a tremendous amount of work thinking about this stock, trying to work out what the hell Michael Saylor is actually doing. And we go through it kind of linearly, right? I mean, there's so many rabbit holes that we can go down, but we try to break down what exactly MSTR is doing, how volatility is really a product that the market kind of demands with a very high product market fit, how it all fits in terms of thinking about leverage and Saylor premiums and MNAVs and all those dynamics. And we also talk about what this may look like during the bull market flywheel as well as the hairy back of the bear. So this was a fascinating conversation. As with most things with Bitcoin, but certainly with MicroStrategy, I came in with a bunch of questions and I've come out with even more. But I think you're really going to enjoy this as part of my ongoing journey trying to work out what this stock is actually doing. I hope you enjoy. Let's get stuck right into the conversation. Now, just before we get started with today's conversation, I want to be really clear that because we are going to be talking about MSTR, which is a publicly traded stock, that absolutely nothing that we discuss today is financial advice of any form. We are just sharing our opinions, our ideas, our frameworks, how we try to think about this thing from a more conceptual standpoint. So please do not take anything that we say today as financial advice. Do go and consult, do your own research, go and consult whoever you need to properly understand what's going on here, because we are talking about a very, very volatile asset, which, to be honest, I am still very early in my own learning journey about. So do take everything we say as our opinion only, and otherwise enjoy the show. G'day folks, and welcome back to another edition of the Rough Consensus podcast. And today I've got a guest to talk about one of the most interesting topics in Bitcoin for sure, and that is Jeff Walton, Punter Jeff. We're going to be talking MicroStrategy, MSTR. Mate, thanks for coming on the show.
Absolutely. Happy to be here. It is the most compelling story in all of finance right now. I mean, Bitcoin's up there, but what's going on with MicroStrategy is incredibly compelling. I think it's the coolest story of, our time.
It's definitely one that got me thinking. I was saying just before we hit record, the first question is an interesting one. You've been using this term bewilderment, right? And you've got, like Bitcoin, and something I've learned from going down the rabbit hole, and for context, about a month ago, I knew absolutely nothing. And I had the natural reaction that anyone has, which goes, this doesn't make any sense. This looks like a Ponzi scheme. I don't understand how this can keep going on. So I went through my own phase of bewilderment, but like all things, you've got to sit down and actually crunch the numbers, try and come to some kind of a thesis. And I think I agree, it is one of the most interesting things happening in finance, let alone just in Bitcoin. So I want to start with this idea of bewilderment. From your perspective, put yourself in the shoes of someone like me who's just come across it, or a critic. Why is the immediate and natural reaction to look at this thing and go, this doesn't make any sense? What Saylor's doing can't be. There has to be a terminal velocity here somewhere. What do you kind of think about? Where does that come from?
Yeah, I think there's so many things to unpack. And I think the word bewilderment really captures the entire market, right? It's retail traders that think it's a Ponzi scheme. It's traditional finance that thinks there's, something wrong with it, or that doesn't understand computers. And there's this bewilderment is a great word. I think it captures all of it. But, it kind of depends on the perspective of the person that's looking at MicroStrategy, right? So, many people, when they are, beginning their crypto journey, and I'm just going to say crypto, not even Bitcoin. If they're beginning their crypto journey, what they've seen in the news, what they've heard from people and friends, are people that have just gotten wrecked by crypto, or at least wrecked on paper, or optically wrecked from a timing perspective because they don't understand volatility. And so they kind of come into it with this perspective of this is a casino, this is gambling, this is, they've seen FTX collapse, like all of this, dynamic of past cycles where you had bad actors that were operating poor, they were basically operating banks, and they didn't have guardrails in place or leverage ratios to stay within, or any firm rules to make sure that they don't get over leveraged or anything like that. So you kind of start off in a negative position, just having that like underlying distrust of a company or a corporation that's in this ecosystem and in this ecosphere operating with leverage, right? Like you say the word leverage, people freak out. People just generally freak out. And rightfully so. Like there have been bad situations. So that's kind of one camp. And those people generally, will call MicroStrategy a Ponzi scheme. They don't understand how banking works. They don't understand how lending works. They don't understand how insurance companies work. They don't understand how big capital moves. They don't understand like interest rates and big macro environments. So that's kind of one camp. And then the other camp is what I think like is the challenge with most of the traditional finance ecosystem is they don't understand how computers work. And they don't understand how the internet works, and they don't understand how Bitcoin works, and they don't understand the scale and the math, the size of the computer network, and the technology that's actually underpinning Bitcoin in general. So those folks see they see Bitcoin as tulip bulbs, right? So you've got a camp that actually understands the technology. But they're not cool with leverage. And then you got a camp that's cool with leverage, but doesn't understand the technology. So, and like everybody fits into this bewilderment, bucket where they jump to a conclusion that's easy to jump to, quite frankly, right? Like
it's the natural conclusion, right?
The
you look at
natural
these things
conclusion.
are too good to be true.
It doesn't make sense. Like I need to stay away from this. This is too good to be true. And then, you start to peel back the onion a little bit and think about, corporate infrastructure and, like these marketplaces, like the traditional debt market, the equity market. What is the architecture of the equity market? What is the architecture of the debt market? How do these markets function? What are assets? Like what are liabilities? How are equities priced? What is the valuation of any equity? If you start pricing this equity relative to other equities, like what, how do you compare the two? What is capital? What is financial strength? What, and what are leverage ratios? And you start to run this comparison where you start to compare, some of the top publicly traded equities, and you ask questions like, why is Apple trading at 30 times their earnings? Like, and why is another company trading at 10 times their earnings? Like, is it really earnings that the entire market is after, or is it
Amazon's never paid a dividend?
Yeah, and it's like, well, what is the market really after, and what is any representative equity worth? And you like again thinking about the architecture of how that works and the systems that sit beneath it, and then thinking about a future hybrid equity market where you've got a Bitcoin is playing a role as an asset on a balance sheet. I mean, all this stuff starts to become really interesting and appealing with like, okay, well, now how do you value an equity that has Bitcoin on its balance sheet? Like, how do you value the Bitcoin? Because if you're bullish Bitcoin and you think Bitcoin's going to, a $10 trillion market cap, well, how does that play into all stocks being forward looking? And like, what is the value of that financial strength today if I think the Bitcoin is worth Y in the future, and you start to run this game theory of like, okay, well, how does all of this work? and you start to put these pieces together that becomes a very compelling story to talk about when you think about the potential future financial strength of a company that's holding more Bitcoin than all of the nations in the world, and 10x more than, the next closest 10 companies combined. And that becomes not 10x, like it's like 3x more the next 10 companies, publicly traded companies combined. And that's a cool story. Like I want to know more about this and think about this in the future. And I think this is a very similar situation to looking at or thinking about Amazon back in like 2005, when you've got this online book retailer that's, collecting all this data and information, and they're starting to sell other products online, and they weren't technically profitable from a a profitability net income standpoint because they're rolling all this profit into R&D. But anybody who like saw the forest from the trees there, you're like, oh, this thing is going to be a behemoth. This is a $100 billion company that's going to be a $1 trillion company someday because they're going to take over all of these different industries. And nobody knew they were going to be the largest cloud service provider, right? Like these are things that come with financial strength and the ability to go and do these different things in the marketplace. So I think we're in a very similar situation with MicroStrategy where we're in the accumulation phase. What they can do with it, I think, is going to be developed and expanded over time in the next 10, 20, 30 years is going to be incredibly exciting. But like right now, it's like, hey, let's just get as much Bitcoin as humanly possible on the balance sheet via these traditional vehicles, convertible debt market, equity market, et cetera, before, the demand increases drastically from nation states or, other corporations, et cetera.
And I think this is what makes it so interesting. I mean, I've certainly encountered that for me, like I would consider myself a Bitcoiner first and foremost. And even for me, like Bitcoiners are to the TradFi world what MSTR Hornets are to Bitcoiners. And there's even Bitcoiners who are like, I can't quite get my head around this thing. And I fully agree that it's one of these interesting dynamics where it forced me to actually think about how financial markets work. And I think we can probably all agree that Saylor's probably a genius when it comes to understanding these things, right? He understands where those pools of isolated capital are. The bond market can't buy Bitcoin. They also can't buy equities. Equities can't buy Bitcoin. They can't buy bonds. And I think this is where I want to go with the next idea of what MSTR and MicroStrategy actually does, because this is different. It's obviously not the operating business. I think anybody if you're looking at the operating business and saying, oh, look, your cash flows don't quite make it work, it's like, obviously, they're a Bitcoin treasury company. So when I went down this rabbit hole and started thinking it through, right, and even Saylor, I listened to all these podcasts and he's getting better at explaining this thing as well. He did a really good podcast recently with Alex Thorne where it actually, like, I had all these floating ideas and he really consolidated it. But there's basically two charts that I ran through when I was doing my analysis. The first one, MSTR versus BTC, just price. And like everything, it was number go down. They adopted a Bitcoin standard. And then for 3 years, it was number go nowhere. It went sideways. And then this year, we've got number go up. Now, that's hard, right? Going up versus Bitcoin at any time. So that's the first thing to say. Like, clearly something changed when they adopted a Bitcoin treasury strategy. And the second one is if you take the realized volatility of MSTR and divide it by the realized vol of Bitcoin, they adopt a Bitcoin treasury, and then suddenly it starts increasing. So MSTR's vol is some multiple on top of Bitcoin's. And then it started to fall into place. Okay, so what he's doing, he's packaging up volatility. And what he talked about with Alex Thorne that kind of nailed it in for me, some bond traders want low risk, but they're willing to accept some volatility trade-off. So he's basically packaging up, oh, you want this much volatility and this much return? Here's an instrument for you. Here's one for you. So if you could just like kind of break down from your perspective, what is it that MicroStrategy actually does? Because in my view, if their product is volatility, there is product market fit on Wall Street for volatility. They love that shit.
Yeah. I think you hit the nail on the head, right? I mean, the software business is small, but I think still meaningful in the fact that they are doing, AI for BI and they have the ability to collect data and build on this kind of AI platform. And I think there's a high likelihood that they're running Bitcoin analysis on the back end and having some understanding of what's going on with data and information on that perspective as well. And probably maybe informing ATM strategy, maybe informing some of these other things. So like everybody throws the software business aside, but like having an AI infrastructure and a tech team just in general is going to be valuable. And I'm excited to see how that evolves over time. So that is a small component. To your point, I mean, the Bitcoin treasury company and how they're managing and monetizing the volatility is incredibly appealing. And it's exactly what I'm doing in my current job right now in thinking about reinsurance. So like my job as my role as a broker, I literally take risk. So imagine an insurance company and you've got like all of this catastrophe risk, right? Let's just say you got $1 billion of catastrophe risk. Like if a hurricane hits Miami, there's $1 billion loss in the industry. And so what I do is I take a slice. So I'll say, okay, 250 million in excess of 250 million. I'm going to charge 50% for that. And I know who wants 50% risk. So I'll send it to them. And then the next tranche is like 500 million x 500 million, or 250 x 500. I'll price up that tranche, and maybe that's 30%. And I know who wants 30% risk, so I'll send it to them. And then the top piece is, let's just say 10%. And I know who wants that 10% risk, and I'll send it over to them. And like all of those markets are different. And there are hundreds, I work with 100 different reinsurance counterparties that all have different risk appetites and different regions that they're interested in, because all of those reinsurance companies are investing in all sorts of different assets all across the globe, globally diversified. They're investing in currencies, they're investing in bonds in Africa. Like they invest in all sorts of things to manage their future liabilities. So like this concept of thinking about matching risk to appetite like exists everywhere in the market. It's like that is the financial market. Like that is all of the financial market. Equities, why do they exist? Because there's people that want that risk return trade-off. Like bonds, why does that like people want that risk return trade-off? And so if you think about where the economy is going, and you've got this huge chunk of the entire capital world is receiving negative real yield relative to the monetary supply, you have a constant situation where every capital allocator is trying to figure out how best to allocate their capital, and may reconsider what percentage of allocation they may have in these like negative real yield assets to match their duration. And so as that equation is changing for all of these large capital allocators, like we're talking multiple $1 trillion, right? Like we're talking $600 trillion in the debt and equity market combined. And everything is opportunity cost at all times everywhere. So as you reevaluate, portfolio construction, asset types, asset allocations, there comes a time where, you look at these other products and see how they fit your portfolio. And any rational asset allocator that subscribes to like Markowitz modern portfolio theory, which is like any portfolio manager that has any diversified set of risks, subscribes to Markowitz modern portfolio theory, meaning like if you add a new asset to your portfolio with different risk return metrics, it increases the return and reduces the risk of your entire portfolio. And that is, Bitcoin provides that product to get that different risk return metric that's non-correlated to these other markets and potentially inversely correlated to, some of the other things that they hold. So to me, it's just a matter of time before people really understand the technological power of Bitcoin. And I think most of the traditional financial market needs to figure that out first.
Yeah, and we're still early in that, right? Let alone a company that's then levering up to buy Bitcoin. Like they're actually two streams of thought, and they're not equal. They're different things.
Yeah, completely different. And I bring this back to insurance because I think this is a unique perspective. Over the last decade, I've seen claims costs are rising like exponentially. Okay, so like if your house burns down, you got to rebuild the house. The cost to rebuild homes and put roofs on homes and like all these other costs are increasing drastically greater than CPI. So you have all of these insurance companies that are like, oh my God, I need to raise my rates. But it's like, how much do you raise your rates? Like, what is the inflationary rate if it's not CPI? And if it's not CPI, why is it not CPI? Nobody's thinking about that. They're using like, they're taking into consideration like building cost. And like, that's pretty much it. They're not considering like inflation and debasement and separating out those two components. And I think a large majority of the market is kind of missing that debasement component. And I think there's going to be an eventual paradigm shift where you've got people that are kind of breaking these two components out, where you've got inflation and debasement, and starting to calculate that in and consider debasement as a separate risk vector that needs an asset to match it, an asset to offset it or to move against it. And that could be Bitcoin in many of these scenarios. And Bitcoin in a different wrapper is incredibly appealing. And so, many of your listeners, I've talked about this a lot, but they may not understand, but insurance companies, they have regulatory environments, and regulators or rating agencies that tell them what assets they can hold and how many of those assets they can hold, and like what percentage of your portfolio can you hold in equities, bonds, these other types of assets. And the regulatory bodies right now, they don't give you any regulatory credit for holding Bitcoin. Zero. So if you put Bitcoin on your balance sheet, you have no ability to leverage against it. But you know what you can hold? Equity. You can hold equity, and you can also hold convertible debt. You can hold bond. You can hold bond instruments. So if you're an insurance company and you wanted to have a debasement hedge, and you were interested in having an asset like Bitcoin in your portfolio, or Bitcoin Lite, right? Like it's less volatile. You're chopping off some upside, but you're also chopping off some downside. So if you want to add Bitcoin Lite to your portfolio, you can today, and you can get credit for it, and you can lever against it within your existing infrastructure. So for those types of asset allocators, like insurance companies, even I think pension funds are falling into this structure. These products provide fit, right? Like the MicroStrategy product, and it's not just MicroStrategy, right? Like Semler started doing this, Mara started doing it, Riot starting doing it. We're going to see 25 companies do it in 2025. And I don't think that's not a bad thing for MicroStrategy. That's a good thing for Bitcoin. Mm. And we're going to see this market continue to grow as these asset allocators are looking for alternative risk assets to put on their portfolio to match future liabilities and durations.
No, it's a fascinating idea, and like at the end of the day, why is Saylor doing this? Because he's making people money. Why do they keep giving him? And at the end of the day, like they gave him a 0% bond for 5 years. Why do they do this? Because there's too much demand for it, right? He can literally charge 0% coupon. So in a way, because he's able to structure these debt for these isolated pools of capital, and he's giving them the return profile that they want, and then they make money, they're going to come back to the well and do it again. So something that I want to kind of try and break down here is this delta between, because there's obviously the belief in Bitcoin. The debasement thing, I think a lot of people understand, right? I hold it as a personal hedge against inflation, debasement, its performance, blah, blah, blah. If we then look at MicroStrategy, they're obviously adding Bitcoin to their balance. Maybe we can start to move into what I call the Saylor Premium. Some people call it the MNAV. There's 1,001 different names for it, right? I think this is probably one of the more interesting components. The Bitcoin treasury value is measurable. We can literally look at it and say, what is it priced now? And there's a bit of inside that Saylor Premium. I just consider everything that's not the Bitcoin priced today in that Saylor Premium. Now, some of that is going to be forward expectations for, all right, he's got 400,000 Bitcoin. What's it worth in 2 years, 3 years, 5 years time? We discount that. There's his unique ability to lever up, his access to the bond market, his reputation. What's he going to do with all this Bitcoin? Is he going to be a Bitcoin bank? So there's like speculative components. There's like just unique moat type components. How do you think about, and ultimately the market's trying to bet on what that Saylor Premium is. Today, tomorrow, it's a dynamic problem. How do you think about this, like MNAV, whatever you want to call it, this kind of thing that is over and above the treasury value? Because to me, it makes sense for it to be more than one. It makes sense for it to be valued more than just the treasury value. But I'm curious to hear your model for thinking about that structure.
Yeah. Well, I loved your diagram here as well. I looked at your newsletter
with the little boxes and the arrows.
Yeah. James got a great newsletter where he outlines this and he shows the different Saylor Premium items. So, MNAV is an interesting statistic. I don't really personally care about it, nor am I trading it. I'm not a trader. I'm more or less thinking about this company and holding it for the next decade or 20 years. I frequently say I don't want to be that person that tells my grandkids that I sold Apple at $100 billion market cap. Everybody's got that relative, that uncle that comes to you and says, "Oh, I would be rich, if I would have bought Apple at 20 cents back in the 80s." And you're like, "Well, cool, you didn't."
If you, you didn't or you sold it.
Yeah, you didn't or you sold it. And thinking about investing in long-term asset management, and this is a really appealing trade to hold for the long term because of the architecture of the equity market, let alone everything else. And the game theory around the architecture of the equity market and how much Bitcoin they hold is incredibly appealing to me. So if we think Bitcoin is going to continue to grow in perpetuity, right? That's the general if thesis, right? Everything else after what I'm saying right now, if Bitcoin doesn't grow into perpetuity, yeah, that's my base assumption is Bitcoin is going up forever. Okay. That's my base assumption. If Bitcoin is going up forever, MicroStrategy's relative market cap, even at a 1x MNAV, right, at a 1x multiple of their net asset value, if it's going up forever, their market cap relative to other companies that are denominated in fiat is going to go up in relation to those companies. And the architecture of the equity market is you have 70% of the equity market is passive investment. And it's these index ETFs that are market cap weighted indices. Okay. So you've got all of these buyers that are buying these index products forever, like 401ks, pension funds, insurance companies that are buying these diversified products. I can't pick the best. I can't pick the winner. I'm going to pick the whole stack. Right. So that makes up 70% of the market. And how those market cap weighted index funds work is if the market cap rises, the new dollars that are coming in the door from the people that are purchasing those products get distributed, on a market cap weighted basis to all of the people that are within the index. So as the market cap rises, it's not a linear increase in the amount of new dollar flows that are coming into MicroStrategy. It's an exponential increase into the dollar flows that are coming into MicroStrategy. So the people that are buying those products, and the products themselves are agnostic to price. They don't care about.
They're basically zombie money, right? They just buy it because they got paid. Yes.
Yeah, they got paid, and they don't even look at it, right? It just goes to their 401k and just auto buy, and that's a majority of the market. So the fact that exists results in passive demand that's buying this product without caring about any of these multiples. And so my fundamental thesis is that base of support is going to grow exponentially over time. People are going to trade this thing based on the NAV, and which is fine. That's the market is for that. Mm-hmm. The monetization of the volatility is everybody can bet on this thing. You can bet long, you could bet short, you could go convertible ARB, you could do 10,000 different things on the structure of the equity. But fundamentally, I think this thing should be the number one, and likely will be the number one publicly traded equity within the next decade because of the existing infrastructure of the equity market. And I don't think that's changing in the next decade. If we see continued adoption of Bitcoin into the future, I could see this hybrid economy maybe changing a little bit, but it's really hard to change zombie money to go from zombie money to not zombie money. And I think that's gonna take a long time. So that's my view on kind of the MNAV thing. Is all equities are forward looking, mm-hmm. And how forward looking are they? Right, you can run this MNAV thing is again you're comparing MicroStrategy to a closed end fund. A lot of people make this GBTC comparison, mm-hmm. Oh, this isn't going to end well because GBTC went up to a 2x premium and then crashed down to a 0.5 premium. It's well, yeah, that's a closed end fund. That's not an operating company with cash flows that can leverage debt markets and raise more capital and do all of these other cool financial products, right? That's just a completely different structure of a of an equity. So, yeah, where can it go? I'm not 100% sure. I think it could get weird, and there could be mania and frenzy, and I suspect that's actually part of my thesis is there's going to be mania and frenzy, and it's going to go it's going to be even more volatile than Bitcoin is.
And the more volatile it gets, the more options come in, the more people bet on this thing, the more leverage, the more. I agree. Explosive in both directions. Expected behavior. Yep.
Yeah. And people are going to get wrecked for sure. 100%. And like, I think, I've also said like, this is going to be the most hated rally of all time, right? Because people just aren't fundamentally going to get it. And everybody's going to be yelling from the rooftops that it's a Ponzi scheme. And it's going to blow them out to the upside, and then the longs are going to come in late, and it's going to blow them out to the downside. And like, if you don't understand what's going on here, and you don't zoom out and you take a long-term perspective of what's going on, I think anybody betting short-term is a very, very dangerous game.
Welcome back to Bitcoin 2012. 2012, 2013, 2014, right? And maybe with a side of 2018 with some BitMEX leverage, right? That's what it reminds me of, right? And it's because, I mean, I've been around Bitcoin since 2018. I've seen some ups and downs. My volatility tolerance now, like I find Bitcoin very quiet and calming, right? Yeah. So like kind of moving back to this, volatility is good. So I think what I find really interesting is MicroStrategy and Saylor's job is essentially to drive excess volatility into the MSTR stock relative to Bitcoin. That's what I view that Saylor Premium. His job is to create excess vol. And I had this idea that I was talking about soon after I wrote that piece. And Saylor was actually talking about this on his recent pod. So I think I'm kind of close to the mark. How do you drive excess volatility? Because MSTR's vol relative to Bitcoin is the product. If he does nothing, let's imagine MicroStrategy goes quiet for 2 years, then yes, I think the Saylor Premium will go back to zero and you essentially get it trading like an ETF. It's like the natural gravity is always for this stock to be valued at the Bitcoin treasury value. So he has to continue to generate excess volatility. And my logic is, and I'll get your thoughts on this, he's got this 21-21 plan, right? And I don't know how much he's already let off, but he's let off a fair few. And I've been describing like he's got 21 cannonballs on his left hand and 21 on his right hand. And you never know when he's going to pull, and bang, there goes 3, bang, there goes 2. Oh, here's another 1.5 billion. And because you don't know when he's going to pull one of those levers, people bet on, oh shit, stock went down. He must be doing an ATM, right? That means he's going to buy more Bitcoin. That means he's pulling one of those cannons. So it's one of those things where it's almost the announcement component is a part of the vol creation, which is the strategy. So I'm curious what your thoughts are on that, and then maybe we can start to move towards the bull market flywheel, because I think that's one side of the equation. There's a bear market, so I will touch on that later on. But I'm curious what your thoughts are on that framework.
I love it. I love how you framed it there, the cannons. I mean, as of today, they've used 17.1 billion of their 21 and 21 plan. So they're almost halfway done with the announced 3-year plan. Of that 17 billion, oh, actually, that's just Q4 purchases is 17.1 billion. Of that, about 13.2 billion is the ATM of the recent 2021 plan, and 3 billion is Q4 convertible debt. So in Q4, just to show how crazy this is, right? MicroStrategy's raised $17.1 billion. That's equivalent to raising $100 million 171 times. Like, raising $100 million is crazy. Like, a lot of people don't understand the scale, right? Like,
and sorry, is that like an annualized equivalent?
I'm just thinking it, right? You're just 17.1 billion divided by 100 million is 171. Right. So they've raised $100 million 171 times, just to like put it into perspective of like, look, if you're like starting a business and you want to go raise $100 million, like go do it. It's going to take you 24 months. And they just did it 171 times in 45 days. You know,
Unreal.
like that, like the scale is incredible. So that gives you a sense of like demand, right? Demand is massive. And now thinking about the excess volatility, because I think this is an interesting component, right? When you structure a debt product where you're truncating the upside and you're truncating the downside, so AKA the convertible debt, what happens to the excess? Who takes the excess? It's the equity holders. The equity
and this
holders,
is actually the idea of you've got your debt is senior to your equity, and your equity is in fact the excess. And yes, no, keep going down this rabbit hole. I like this idea.
yeah. So your debt is senior. They are unsecured, so they're not connected to the Bitcoin whatsoever. But the equity effectively takes that excess volatility to the upside, but also the excess volatility to the downside. So like whatever's left over from, structuring this little tranched out product is what the equity holders are taking. So that's what really, in my opinion, it's not necessarily the ATM that's driving the excess volatility. It's a convertible debt that's driving the excess volatility. And the ATM effectively, I'm honestly really glad they're using the shit out of it right now, because that creates headspace, right? Like that creates capacity to take on future debt, right? Like if you're using the ATM to generate or to put all of this Bitcoin on your balance sheet, that improves your financial strength and reduces your leverage ratio.
Yes, because I was looking at, again, going back to that MNAV concept, just simply by the stock trading at 100 billion, right? It's been more or less flat for a couple of weeks now. Because of the Bitcoin purchases, he's actually increased that, kind of call it like the rock down the bottom, the measurable rock, which actually, for want of a better term, de-levers or reduces the Saylor Premium, because there's more, for want of a better term, there's more real shit there and less speculative premium. By literally, he's just raising that floor. So it's a fascinating dynamic, and it's almost, for want of a better term, it's almost capitalism, where the bondholders take X risk and then the equity holders take the excess risk. And I think that's a really good framework.
Yeah. It's fascinating. I think you kind of saw it too, right? So when the convertible bond was announced it was 10 days after the Fed meeting in November. So it was like November 18th. I think is when the 3 billion was announced. Volatility went through the roof. Implied volatility went through the roof, right? Like we saw that spike. It went up to 540, then it came back down. It like slammed down to 390, and it's like, what is this thing worth? And everybody's trying to figure it out, right? And it's really interesting to watch the narrative on X with everybody talking about Saylor using the ATM, and they're getting tied up on this MNAV perspective. But really, when you zoom out, like it's kind of crazy. I haven't run the exact math, but I think today's trading MNAV, which is like 2.
It's like 2, yeah.
It's like 2. We're talking, we're 80th percentile of 2024 MNAVs.
Yes, it's like de-levered, for want of a better term, like quite substantially, relatively speaking.
Yeah. So I mean, it's I think it's people are trading this too, right? Like people are arbitraging this back and forth, and that market's going to get much bigger as well, because there's this asymmetric timing thing where the equity market's closed on the weekend and Bitcoin's open.
Yes, which also creates excess vol, by the way.
Excess vol
works in his favor. Yes,
and your comment is so true on asymmetric information. This whole game is asymmetric information. Like you have no idea how much Saylor's buying. Right, you have like each week, at least for the last 5 weeks or whatever, he's like announced a new Bitcoin buy every Monday, but you just don't, he's doing it. You just don't know how much, and you don't know and you don't know how much of the ATM he's used, and that's another thing. It was like, we don't really like. Has he announced all of the ATM he's already used or not? Like, is there a chance that he's used more? So anybody that's like speculating on either side of this, like, it's impossible. Like you can't truly understand exactly like what the value of the company is like on any given day.
It's fascinating, isn't it?
It's so fascinating.
So there's one more topic. Oh, sorry, you go.
Go ahead. No, go ahead. Go ahead.
I was going to say that there's one more topic I want to talk about, and then I want to get into the bull market flywheel and the bear market. Maybe I don't know if we call it a flywheel, but the bear market is where I want to put a bit of attention, because I think that's a fascinating idea, and we know the bear market will come. I just don't know exactly what it will look like. But on the Bitcoin yield and the Bitcoin treasury, something that I had at the end of my post, and this is long-term thinking. American Hodl had a great tweet that everyone hits their BitLife crisis. And what that means is that because there's only 21 million Bitcoin, no matter who you are, no matter how hard you stack, your Bitcoin holdings will always follow that logarithmic curve, because the price goes up, you can't buy as much, and eventually you realize I just can't buy anything meaningful anymore. Even Michael Saylor and MicroStrategy are going to hit their BitLife crisis. So right now they've got this Bitcoin yield concept where the idea is that because they're selling the ATM, normally if they're doing share dilution, people go, hey, that's bad for me as a shareholder. But the idea is that they're accreting Bitcoin. You get more Bitcoin per share. And then you get that Bitcoin yield. How much is that Bitcoin per share metric growing? Long term, it is guaranteed that that Bitcoin per share metric will slow down. That Bitcoin yield, which if you think about like a PE ratio or a growth metric, however you want to think about it, it eventually has to go to zero by definition. So that's where you go to the long term and you go, well, what do you do once you've got 500,000, 600, whatever the number is? What do you do with that Bitcoin at the end of the story? So like over time, that Saylor Premium is going to change. The components aren't going to be speculating on when he pulls the cannon. It's going to be what's he going to do with all the cannons now that he's fired all of his shots. That's the kind of framework. What do you think about that long-term vision? What happens at the end of this whole saga?
Yeah. It's an interesting perspective, and Bitcoin is the best collateral the world has ever seen. Okay, it's fully transparent. It's globally liquid. You could trade it. You could move it from here to Africa to Europe to anywhere in a day, right? In seconds, right? Like 30 minutes, whatever. And that technology and framework is going to completely transform the entire financial world. Like completely transform. This isn't FedWire. It's not going to take 2 weeks in order to get a transaction through. Like this stuff is like going from here to there. Like you almost have to shatter your reality of what the future looks like, because it's going to be completely different. And I see this in my world, again, going back to the insurance and reinsurance world. This is just what I know and like what I see. Collateral is used all the time in all of these transactions. And I was even in a, I had an offer to go work for this company called Vestu. Okay. And this company, they had wrote a bunch of business, and it turns out they wrote $4 billion of business that was fraudulent. The collateral wasn't there. The collateral wasn't real. Turns out it was, fraudulent LOCs, letters of credit from Chinese banks that didn't exist. Okay. The problem with the traditional financial ecosystem is it's still very trust based, and there's not a lot of there's problems with that, right? There's problems with having this like fully trust based system, and I'm imagining a future financial world where you have collateralized transactions that are just built in with code, right? If you have a $10 billion hurricane that hits Florida in this little area, like the money moves from here to there, like your Bitcoin goes here, like you get paid, you lose, or there's no hurricane, like you win plus 20%. And there's like escrow written into code with collateral that can, move hands without a trust-based system. And it's just
and you
code.
can verify that it's actually there.
And you could verify it. It's, like trustless. And the world is going to shift that way. Like it's guaranteed, 100% guaranteed it's going to shift that way. It's going to take forever. It's going to take forever, like a decade, like probably more. It's going to take a really long time. But that technology and that infrastructure is already being built out, and it's going to develop over time, especially as Bitcoin continues to rocket and people shift their energy to where value is.
And ironically enough, I can think of one company that has a really big incentive to actually create some of this infrastructure. Strangely enough.
Yes. This one really big company that we might be talking about. Yeah. So that collateralized future, I think, is really appealing. Loan infrastructure, lending to businesses, whatever that might be at some point in the future. I think the other framework that I like to dive into when I'm thinking about this stuff is like, what does the future of value look like? Okay. Not just Bitcoin, just value, right? Like people are still going to live in homes. People are still going to buy oil, probably, right? Like land, commodities, equities. Like equities are probably going to exist. Like owning a piece of Apple because they're providing your cell phone, or like owning a piece of like whatever future AI company because they're dominant or they've got this cool technology. Like holding equities, I think, are going to continue to hold value at some point in the future. Now, I think they're probably going to get repriced into Bitcoin, but they're likely still going to be trading at a multiple of whatever their underlying Bitcoin holdings are, I think. So it's interesting to think about that whole like value creation world and try to like throw stuff against the wall, because you kind of need to think about it in order to like figure out how does it get there.
Well, that's why I put in one of my Saylor Premium inputs, how do I value this thing? No one knows. So because no one knows, everyone's going to have their own model. And, it's not like the bond market where everyone goes, oh, well, this is the CPI measure. I guess I'll plug that in because everybody else does that. It's like, yeah, but we all know it's not. But it's like, yeah, but I have to choose that number because no one else is going to have my number. So it's like, and then people are betting on those spreads. So it's a fascinating dynamic. So I want to talk about this all, as you kind of frame all this stuff up. This looks great in a bull, right? This looks fantastic in a bull market. And I think the default assumption, certainly for me, and I probably still hold this view, even if it's a low IQ take, it's probably going to function like a levered Bitcoin. I think that's probably the right way to think about it, which means it's going to go up harder, and it's going to be more responsive to that volatility. So in the up, hang on, I've got a quick diagram here. In the upswing, he can obviously issue more equity because there's demand for his stock. So he can do more ATM. He can do more converts because the stock goes up, so more of them convert. That makes people money. They give him money at a lower interest rate. Bang, bang, bang. He can continue to run this thing. So in the bull market, this just looks like a Bitcoin supply sink, which also, inverted commas, de-levers the company's MNAV, if that's how you want to frame it. And it's all well and good. But we all know there's going to be some point where we're going to hit some kind of a top in Bitcoin, in MSTR, whatever it is. So let's just talk about the left-hand side of that, the fun times, and then let's transition and go, well, what does this look like on the flip side? Because I think that's what a lot of people, as you think about this, right, you always got to consider the risk. What does the hairy back of the bear actually look like for this thing?
Yeah. Where do you want to start?
Let's go the bull market flywheel, because that's the fun stuff, and we'll close on the interesting bit.
Yeah, I mean, we had a big day last Friday, right? Like MicroStrategy was added to the QQQ, NASDAQ 100 index, which is a really big deal. It's a really big deal. It's really good for Bitcoin, right? It's effectively putting Bitcoin in the NASDAQ 100. It's the fifth largest index ETF in the world. It's the most volatile index ETF in the world. It's the most traded index ETF in the world. Actually, I might be wrong on that. I know SPY is very highly traded, but I think it's got more speculation and volatility. So that's a really good thing for Bitcoin and MicroStrategy. It's adding a constant passive bid on the stock that is going to provide more capacity to offer these debt products. It increases MicroStrategy's credit quality. Their ability to offer bonds is going to be increased if they're, continuing to have this demand where they could tap the ATM and, continue to yield Bitcoin. So very positive on that front. FASB fair value accounting is incredibly exciting. And to me, that's like the gun going off at the starting block for all other corporations in the entire market. MicroStrategy, just to put it in this perspective. So MicroStrategy's earnings over the last 4 years have largely been negative. So if you're any TradFi guy who's going to look at this stock that this youngin told you to look at, you go look at the earnings per share and you're like, this thing's toxic. I don't want to touch it, and you don't do any more research. Boom, you're done. But, anybody who's taking a decent look at this is going like, whoa, why do they have negative earnings? And you start to learn that the accounting system and the accounting framework for Bitcoin is Bitcoin has to be valued as an intangible, long-lived asset on the balance sheet, meaning it needs to be marked down to the lowest point at any point during the quarter for the entirety of their holdings. So they can't capture any value to the upside. They have to only capture value to the downside, which looks really poor for a volatile asset that goes up and down all the time, right? So they've got this negative earnings that they've been holding on their balance sheet, and it's been continued over the last 4 years. You can go back and look at it.
So does that otherwise mean that it's basically valued more or less at about 15K at the FTX bottom? The holdings that Saylor had, they've basically got a lot of it valued down at that level.
Yeah, not all of it. It's during that period.
Okay, so it's almost a per UTXO cost basis type thing.
Yeah, so let's just say January 1st, the price starts at 30,000. And then in February, it goes down to 15,000. But in March, at the end of March, it's up at like 45,000. You have to mark it down to the lowest point during that period in the quarter. So
Wow.
it's varied each quarter. And if they buy more during the quarter, then depending on what the price they bought it at relative to its lowest price, but during the quarter is what it gets marked down to. So there's a significant carry value that they're holding as a negative net income on their balance sheet, even though the value of their assets are worth significantly more. So this all changes in Q1 of 25, right? Like next quarter, all of this changes, where FASB fair value accounting means that they can mark all of the Bitcoin to fair value on the balance sheet during the quarter. So let's just say Bitcoin starts at 110,000 on January 1st, and at the end of the quarter, it ends at 125,000. You have $15,000 multiplied by however much Bitcoin they hold. That's going to flow through to net income as a gain on their balance sheet. So this is massive, right? Like this is going to show many publicly traded companies the value of holding Bitcoin on your balance sheet for the first time.
So it's basically going to have a multi-billion-dollar income statement in the first quarter.
Yes, if Bitcoin ends higher at the end of March than it starts on January 1st.
And they don't revalue to date, right? So they've obviously got all this Bitcoin marked at some price, which is obviously much lower. Do they mark all of that on day one?
Yeah, so it's my understanding that all of the existing gain carried over time is added to beginning retained earnings at the beginning of the period. So it's not all of the gain isn't added, like taken in one quarter. That would be insane. It's not all taken in one quarter. It's just added to beginning retained earnings. But I think they do have the option to redo their income. They don't restate their earnings, but I think they have the obligation to show what the earnings would have been historically. So I think it's just to help like the investing world understand like how the financials changed looking back historically, which would be pretty big. So this is super important because MicroStrategy currently qualifies for the S&P 500. The S&P 500 represents 3 of the 5 top largest index ETFs in the world. Okay. The last component that they need to qualify for the S&P 500 is to have positive earnings over the last 4 quarters summed together. Okay. So MicroStrategy is currently holding it's like a $500 million loss over the last 3 quarters. Okay. Bitcoin only needs to move like $1,500 in Q1 in order to erase the last 3 quarters of negative earnings and thus qualify for the S&P 500. It's like tiny, right? The Bitcoin doesn't have to move hardly at all in order to effectively wipe out multiple quarters of negative earnings. So I think there's a high likelihood that there's going to be positive earnings in Q1 2025 when they do adopt FASB fair value accounting. We'll find out in May. And at that point, they will technically qualify for the S&P 500. And this is going to be super contentious. Because the S&P 500 has a committee where MicroStrategy is going to go to a committee and they're going to determine whether or not they should include MicroStrategy. And I'm sure all of the things are going to come into play. Is this a Ponzi scheme? It's too volatile. What is Bitcoin? All of this stuff, they're going to have to figure out if they're okay with it. And so I think it could take a quarter or 2 or maybe 3 before they really start to go, wait, we need this in there. But I think they technically will qualify in May for the upcoming June inclusion.
And that then creates your passive bid coming from all these indexes, both NASDAQ and S&P, which in theory allows him to sell more ATM, which then also allows more converts. So as you kind of run this thing, I mean, I think you can really see a story where on the upside, this is fantastic, right? Because people, basically, if people are making money, and that be equity holders and or bond holders, people are going to keep giving Saylor money because they make money, right? So it's kind of that simple. It's capitalism 101. What does the hairy back of the bear look like? Because at some point, and the way I frame it up Bitcoin will eventually find some kind of ceiling. I fall into the camp where I have this saying that I use: the bull market will author the bear that follows. So if you have a bull market where it just goes vertical and we wake up tomorrow and it's $1,000,000, well, then I'll see you probably at 150K, right? We'll have a big ass drawdown. If on the other hand, we have this like slow, steady grind, maybe the pullbacks are like 40%, because I can't imagine an 80% drawdown from here going to 20K. I think this is very unlikely. So the bull market structure will help author the bear. So let's just envision, for the sake of argument, Bitcoin goes to 150, 200, and then has like a 50 or a 40 or a 60% pullback, something of that nature, comes back to our current level. How do you envision MSTR performing when, in theory, the Saylor Premium should compress because his ability to sell stock and sell bonds is probably less so?
Yeah, it's an interesting dynamic, and I like thinking about it a lot because I'm going to hold this thing for a decade, so you got to think about like the mentality.
You're going to go through it eventually.
I've got to be prepared, right? I got to be prepared to like if I'm going to ride the bull, I got to be prepared for the bear, and like what it might be, right? It's akin to the old Bitcoin holders going through all of these other bull markets, but there's so many things there, but in past Bitcoin bull market, bear markets, some of the challenges with Bitcoin, when you're holding all of this asset, let's just say like last bull run, when you're holding Bitcoin in 21, a lot of the questions were like, okay, how do I monetize this? Like, is the only way to monetize the value here to sell it? And that infrastructure and dynamic, I think, is changing pretty rapidly for Bitcoin, where you could take loans on it, or there are other opportunities to, like, if you don't want to sell your Bitcoin, but you want to take a loan, or, you're still working and you still have cash flow and you want to use it, you want to buy a house, or you want to go, you want to go do things like that. Infrastructure and dynamic is changing and improving over time into the future. Now, for MicroStrategy, that infrastructure is actually already built out with the options market. And you can run a yielding strategy without, taking out a loan, or there are so many more options to earn a yielding or run a yielding strategy, whether that be with the options market or taking a portfolio loan or leveraging margin or using these other products against your collateral, because it is an equity and it fits within the existing infrastructure of the financial world. So that's point one, is like there is value of holding MicroStrategy beyond Bitcoin, because you can run these like types of equity call, covered call option strategies where you can yield your stack if you have information on what's going on, you understand, what's going on in the entire dynamic. So that's, and the
idea, sorry to interrupt, but you've got, because in the bear market it's obviously more volatile, and when it's more volatile it creates more volatility premium, which means you can technically sell those options and actually collect that income. And if you're a big institutional player, because you can collect a higher vol premium on MSTR, you would actually, in some cases, prefer, even if MSTR goes down, you would prefer to earn an income because you earn more than some other stock where you're going to earn a fraction of the vol premium.
Yep. So that's point one, is like this again, architecture and infrastructure is built out. It exists. And so you're going to have these people that have been in this trade for a really long time, and they want to continue to hold it for a decade. They're going to be running that type of strategy. Like I don't foresee these people trying to time the top to sell it to buy back lower, right? Like I don't think those people, I mean, those people will always exist, but like the people that have been in this trade for a really long time aren't going to try to time this thing. They're accumulating and they're figuring out how to lever it into the future and earn a yield on it. So you've got that cohort of people that are holding the stock. Two, you also have the passive nature of the funds that are holding the stock, and they're not selling it. If this is also reflexive in the opposite direction, right? Like as these portfolios rebalance lower, right? Like if MicroStrategy runs up and it rebalances higher, and then all of a sudden it turns and rebalances lower, as long as it doesn't fall out of the index, like you're still in the index and you have these passive flows over time. And if you can weather a bear, if we think the bear market at some point starts to compress, like the time frame starts to compress, which I personally believe in. I think like time frame and volatility of Bitcoin bear markets is going to shrink because you have these new buyers that are coming to the scene with like nation states and corporations that are adopting these strategies and those sort of things. So it kind of depends on like length of the bear market and whatever that may look like. But I suspect we're going to see something very similar to like the stock chart that Tesla looks like right now, where you have this like parabolic rise and then it kind of like recorrects, and you weather the bear market, and then you have this kind of like parabolic rise. And I think we're going to continue to see that kind of type of volatility. So passive side is another interesting component. And then the last component is the financial market infrastructure that they're able to offer, right? So you've got, if we go into a massive bear market, and let's just say MicroStrategy's volatility or MicroStrategy falls more than Bitcoin falls, all of a sudden, any convertible bond buyer looks at MicroStrategy as appealing, right? Like that demand for that convertible bond might like rocket, because you're like, okay, this looks really good, because the premium is still, maybe I'm still getting a 50% premium. Maybe it's a zero coupon bond, but I'm holding it for 6 or 8 years and I'm still bullish Bitcoin. And maybe, you offer a $5 billion convertible bond, and all of a sudden, what I'm getting at here is Saylor is going to be in strength in this bear market. The last bear market, he was there, like MicroStrategy was not in strength. There were concerns about the company.
He must have done some soul searching.
Oh man, I couldn't imagine like trying to go to sleep during that.
1.8 billion unrealized losses.
Yeah, and he was like, "I'm riding this to zero." That was an epic video, but that it's a completely different dynamic, right? Where there were people that were not willing to provide financial. There were less people willing to provide investment into Bitcoin at that point in the bear market, especially with MicroStrategy being underwater. Now, if we fast forward to your scenario, right? Like, let's say it runs up to 200,000 and it drops 40% to 120,000. Well, guess what? They're still in the black by a ton. And if you think about their financial leverage, and I've got this little spreadsheet here that I've been tracking myself. All of the debt itself is unsecured. So it has no tie to EBITDA. It has no tie to like the Bitcoin. Right now they have 7.5 billion of liabilities, just debt on their convertible debt on their balance sheet. Other than that, all of the assets are on balance sheet already. Like there's no debt relative to it.
In a way, the risk of buying the Bitcoin, so to speak, has been transferred to the equity holders. So essentially, the equity holders have actual capital to their share, which is the Bitcoin per share. Yes. Yeah.
So you've got $46 billion of assets relative to 7.5 billion of debt. So your leverage ratio, your liability to asset ratio is 16%. Okay. So in order for MicroStrategies...
It doesn't sound like a Ponzi, by the way, at 16%. That's like a typical household balance sheet.
No. Like, I mean, think about anybody taking out a loan on a house. Like 80% debt to equity, right? Like that's a way different equation. Like, so this seems very healthy. I would say that they have capacity to offer more debt, right? And meanwhile, people are like, Ponzi.
No, I think that's actually a really like sober grounding take. It's like 16% isn't the levered story that you hear a lot of pundits talking about.
Yeah.
But that's the fact of the matter. That's the truth.
FTX was at 120%.
So is the government.
Yeah. yes, absolutely. So if you think about like, what would the Bitcoin price need to go to in order for the assets to be worth less than the debt? And I think that's an interesting analysis to run. And the assets would have to be worth less than the debt for an extended period of time, right? Because there is no EBITDA constraint. There is no Bitcoin constraint. Like, it's not tied to any of this stuff. So the price of Bitcoin, as of today, we need to go down to $17,200 for the assets to be worth less than the debt.
And out of interest, let's say we do get a bear market, probably not 17K, but let's say we do get a bear market. Let's say it goes longer than we expect. Some of those, I think you did 3 billion of 2029 converts. What happens in the scenario where though he has to actually pay those back at par. Would the equity holders essentially have to be diluted? Because I assume the software business isn't going to be able to get the money to then pay those bondholders. How does that function work, right? If you do get a long, protracted bear market, what does that look like at the end of the debt cycle?
Yeah, I mean that's an interesting question. I think it really comes down to like where the equity's at relative to the conversion price, right? Like if you think about the structure of most of these convertible bonds, they're in the money. Almost all of them are in the money right now. 6 months in. Most convertible debt in the entire market like expires worthless, or it doesn't get converted into equity. It's just like you pay the bond like you pay the bond. And they're held for, same duration, 4 years, 6 years, 8 years, whatever. So I guess what I'm saying is like MicroStrategy's performance of these bonds like they've got a lot of room to run for them to underperform like other bonds in the future. I think that's kind of what I'm getting at. But the second piece is I believe they could use the ATM to pay future debt obligations if necessary.
And I guess you could also, let's say the stock trades down 60%, you could in theory do another convert, because the idea is with these converts.
Refinance.
Yeah, because you've got a stock that's 100 volatility. If you do a convert where the stock's only going to move 50%, in theory, if you could issue another one of those at the bottom, the stock only has to go up 50%. So someone's going to go, well, it's a 100 vol stock. No, it has to go up 50%. I'm going to make money. He can basically use that debt to pay off the previous debt. And the other thing I thought was, I actually quite liked his sass when he said it on that podcast with Alex Thorne. He said, I get asked all the time, well, hang on, some of your debt is trading at distressed levels. Why don't you buy it back? And Saylor's basically goes, well, no, why don't you buy it, Mr. Bond investor? Because you're going to get 100%. You're going to get par back. If it's trading at 50 cents on the dollar, that's an easy 50%. That's a doubling of your money. Go and pick it up. That's your problem.
Yeah, right.
Fascinating.
And to your point on refinancing the debt, Mara just did this. I think Mara's recent convertible debt offering, I think they used some proceeds to pay off existing convertible debt, and I think they used some proceeds to pay off or to buy Bitcoin. So the ability to raise future debt. And again, if you're thinking about an extended bear market and somebody's still bullish Bitcoin, that could be an ideal time to buy this convertible debt or be interested in buying this convertible debt, because it would be a relatively low risk if you think that, the liquidity cycle is going to change, or, whatever dynamic there may be in the future. So there's massive financial flexibility to refinance debt, utilize ATM. They're under leveraged, and in my opinion, everybody thinks they're over leveraged. They're like this thing can't go on, but it's like when you start looking at some of the math, it's relative to some of these other companies and how they're trading. MicroStrategy's financial strength looks better than almost every single equity in the entire market. One
of the things that's really stood out to me that you said earlier is that he's already done, I didn't know this, he's already done so much of the ATM. So if you think about that, he's doing ATM up front, building the Bitcoin balance sheet, which now you've got more stuff to be volatile. Then he can do the converts as the second phase of this thing, because once you've got the thing that's going to be volatile, the reactor as he calls it, now when you do the converts, the probability that they're going to go in the money is actually higher, and he can do these. I mean, it's wild stuff. As we come, respect to your time, as we kind of come towards the end of this thing, you mentioned Marathon. One of the things that I wrote many months ago is I flagged that at some point in this cycle, zombie companies are going to pull a Saylor, and that was one of my topping signals. And I specifically said public miners will do this. And Saylor, it makes sense. MicroStrategy, it makes sense. I can understand why they're doing that. Miners are a different animal. Mining as a business is destined to go to zero. And a lot of people get confused here. It's not mining as a network. The mining network will be fine, but individual miners can and will go bankrupt all the time because the difficulty adjustment is just cruel. Now that we've got miners doing this, in a way, it's like a tacit admission that mining is a really tough business and they're probably not going to make it anyway. What's your thoughts on, there's obviously like your smaller companies, your Metaplanets and your Semlers and all this, but then you've got miners. What's your thoughts on the, let's call it the Saylorization of balance sheets not everyone has the cojones that Saylor does, right? So going through that bear market's not going to be an easy journey. What's your thoughts on that trend?
Yeah. Yeah, it's interesting. I personally think that we're going to see 25 plus companies do this over the next
I
year.
agree.
Yeah, and the market's hungry for this stuff. It's very clear. The market is hungry for this convertible debt, and the equity performance is undeniable. Undeniable.
Volatility has product market fit, if you can believe it.
Yeah, volatility has product market fit. And in a world of like just boring, non-volatile like equities and bonds and stuff, like this stuff is exhilarating. It's a jolt, right? It's like the, CPR machine to some of these balance sheets. And yeah, we're gonna see a ton of companies operate and do this into the future. I'm imagining a new product over the next year is a convertible bond ETF, a Bitcoin backed convertible bond ETF, and it's just a product where all of these companies that are offering these convertible bonds, you create an ETF product where somebody can buy the ETF product, and it's like a diversified portfolio of these Bitcoin backed bonds. All of a sudden you're like, boom, there's somebody that wants to take it's like a different, volatility tranche where you're capping the upside, minimizing the downside. And like you capture all of the exposure from, you've got this, small tech company that's 99% Bitcoin. You now have got Similar Scientific that's, healthcare and Bitcoin, maybe 50-50. You've got the mining infrastructure where it's maybe like 75% Bitcoin, 25% mining infrastructure. And you've got all of these other companies that have different underlying business models that can monetize this product and use it to give them a financial jolt to their balance sheet. So I think, I mean, the ducks are quacking, I think, as Saylor said. If the ducks are quacking, feed the ducks. And there's so the pools of capital are so deep, and there are so many pension funds that are underfunded. There are so many insurance companies that are they have huge, massive reserve risk on their balance sheet. If inflation expectations or debasement expands faster than expectations, a lot of these like liability markets, these long tail liability markets get eviscerated, and they're going to be starving for products to capture that debasement and inflation risk. So I'm very bullish on that just shifting dynamic and where that goes. Like those products are really good products, I think, for these large capital pools.
It's fascinating because, like, in many ways, this whole just thinking through this problem has taught me so much about finance. And Bitcoin's already done that, right? You don't go down this rabbit hole till you find Bitcoin, and then MSTR has taken me down a whole different rabbit hole that I didn't expect. And I certainly came into this thing skeptical, as I think most people probably rightfully should. But the more that I look at it, the more I'm certainly like when I put capital in, I'm like, I think I've got 16 shares now, so I'm still a fairly small player in the game. But I know that that's going to swing around like crazy. But it's part of that. Like I've gone through the Bitcoin journey. I understand volatility. Volatility doesn't scare me, and I'm of an age where we can just let this thing run. So in a way, it's one of those things like you got to put a toe in. And I very much feel like I'm kind of taking all those lessons about the things we've told TradFi. Hey, just put your toe in, just try it out. Now I'm like, all right, back to square one. Bitcoin's 2013. I'm going to just put a toe in, even if it's the top. I'm going to put a toe in and just explore this thing. And it's also why I like to use the on-chain side, because I can actually look at, well, what's Bitcoin doing? Because MSTR, if it's levered Bitcoin, then I'm just going to look at what is going on with Bitcoin and use that as my guide for what the hell is going on with MSTR.
Yeah, it's fascinating. And I mean, I would be curious to explore the, if you haven't checked it out, the CMSTR product. Have you heard of this?
No.
CMSTR, this is a Stoker IO. This is I think it's Adam Back is sponsored Stoker or something like that. But it's a collateralized MicroStrategy product. Okay, so MicroStrategy that is tradable 24/7, 365 on a blockchain, and you could go back and forth in between Bitcoin and MicroStrategy. So you could trade MicroStrategy CMSTR on the weekend, and it's infinitely divisible. So like, if you and I like went out to dinner and you accepted CMSTR, and let's say you paid for dinner, and I could like shoot you some CMSTR in exchange for like you paying for dinner, something like that. So I'm also very bullish on the blockchain and the like turning equities on chain, so you can begin to create utility with them, right? Like that's something you've never been able to do. Like I can't go to Starbucks and go buy a coffee with a piece of my MicroStrategy shares or Apple stock, right? Like I have to sell it and get the money, and I got to move it to my account, and then like
T+3 and blah blah blah. Yep.
Whatever. Yeah, but in a future world where you have like a hyper digitalized economy and these other digital assets that are tradable 24/7, 365, super liquid, there's no reason that equity couldn't be that. Like equity should be tradable 24/7, 365, like liquid peer to peer, and able to trade based because it's got value. And I'm bullish on that potential future as well. CMSTR is like tip of the iceberg on that. I mean, you've got to have like, I don't know, $300,000 like starter to start doing that. But it's an interesting concept, and it's fully collateralized by a Swiss national bank that holds the shares. And yeah, it's an interesting.
Fascinating. Jeff, mate, what an absolute pleasure. It's been a real mind bender. It's one of those things, every time I go into an MSTR, even Bitcoin rabbit hole, I come out with more questions, but it's great because it's just more opportunities to learn. Mate, where can people find you and keep track of your work? Because you do heaps of good stuff.
Yeah, absolutely. Thank you very much. I appreciate it. And the same, right back at you, man. A ton of really good data out there. I've learned a lot from you as well. So everybody can find me at Punter Jeff. It's down there on my title. We do have a group called MSTR True North. We do episodes on Wednesday night at 7 p.m. Pacific, 10 Eastern, and we talk about the MicroStrategy trade. It's a group of guys that gets together, and we're at the front end of this trade, and we're thinking about all of the convertible debt and the equity market and ATM and earnings calls, and we're talking about everything going on with the stock and the equity. So it's been a lot of fun. Saylor retweeted us on Friday. We had 100,000 people on the stream. It was pretty crazy. And it's been a blast. So this has been great. I appreciate talking to you. Look forward to the next one.
Good on you, mate. Sounds good, and thanks for coming on. Cheers.
Appreciate it. Cheers.